Hey, what's up, everybody? It's your boy Zach Terrell. Can you hear me okay? Mic check 1 2 1 3. Mic check 1 2 1 3. Make sure I'm good. All right, give me a minute. Let's see here. Hey, what up, Jeff? What's up, Nisha? What's up, Omar? Dale, welcome. I love it. Let's see it. All right. We're gonna wait for a couple people. I know it's late. You already know your boy had my hat is crooked. All right. You already know that your boy had to be with moms to celebrate grandpa, right? That's what today was about. So I'm gonna be quick about it. So essentially, my grandpa was dope. He's an OG, right? So this is a late live. Yes. I had a long day. I'm sorry. It's the end of the month and I wanted to get it in right. So just real quick, my grandpa's an OG. He passed away yesterday, a year ago. His birthday was today. So we all got together at my mom's house. We celebrated, right? And at the end of the day, all week I was talking about doing like a live stream, a live training session around this either yesterday or today. And I just figured let's just do it today, right? I got a lot of requests, a lot of people asking questions, a lot of really green traders. So I wanted to make sure that we can kick off October right, so you can go in with some tools and just able to be a little dangerous in the market, especially if you're newer. If you're seasoned or more seasoned, I still think that there's things to learn. All good. Some things that you guys might not know is probably more related to patterns and price action. So we're going to talk about some of the traps and stuff like that we might fall into. And then we're also going to just kind of break down some of the nuances of like what a chart is, right? Like, so that's going to be real quick. Just go over those basic technical things. And then we're just going to get into the charts a little bit. Okay. Now, if you guys weren't a part of the last live stream was or live training session that I did on my own was about acceptance. Psychology is a big part of my journey, and that's going to be something that I continue to speak to. So the next training coming up is going to be about commitment. It's part of my acceptance commitment therapy that I've personally taken, a journey I'm on or have been on, and I just want to pour in to you guys the things I took away that's helping me with my trading that may be able to help elevate you. So that's kind of what I'm doing. So the next one is going to be a lot more structured, a lot more like there's going to be some technical terms and stuff like that, but it's always going to be charts and it's always going to be relevant to what we see in the market. Okay, because that's what we are. We're traders and we're investors. So we're trying to figure out the psychology piece as it relates to our trading and our emotions, right? So we're gonna delve into that more as time progresses. That's gonna be my next training session. Okay, tomorrow I do plan to live trade, so stay tuned for that. I am going to be live trading before market open for futures. I will be trading before market open for futures. Will I go live? I'm not sure. I typically just take one contract, and then I get my gains and I get out and I move on. And then when market opens, I typically don't take many trades until after 15 minutes to 45 minutes after the open. So we'll see how tomorrow goes, but the plan is to go and do a live trading session tomorrow. Okay, so before we get into the charts, before we get into the training, is there any questions? Now we'll have more questions available to ask at the end. I'm going to read through the comments and then we're going to get into it. I am going to be using some new tech, right? I'm going to be trying to teach you guys in a different way, and let's see how that goes. It's a learning curve for me, and hopefully it's well received. I know I did a trial with this the other night, and it seems like people liked it. So we'll see how this goes. So this is a late live. Yes, Jeff, it is. Get the credit out of your eyes. It's not time for bed yet. All right, I want you to dream about me and what we talked about here. All right, not creepy at all. All right, hope you all had a great day. Yes, what it do, what's good. Lace, thank you I will take the training I need. Let's get it. Evening, family. Okay, let's go. All right, so right now I'm seeing about 11 views. I'm not sure how many people are gonna get in. I know this is a late live stream, but we're gonna do what we do. Okay, so we're gonna go right into the charts. Okay, so let's keep things a buck. All right, I have a device, and this device is my tablet, and my tablet has the ability to overlay information onto my chart. So we will be utilizing this in order to help teach you and identify things easier. Okay, let's see. You eventually do lives on Zoom instead of YouTube. No, I will not, JC. My lives will only be on YouTube. Okay, all right. And as far as if you're referring to like the latency or whatever, or the delay as it relates to trading, then I think there's this ultra low latency option. I'll have to experiment with that to see if there's less delay. Okay, so all right, let's keep things pretty simple here. Okay, so at the end of the day, and I know some of this is gonna be like, man, we already know this, Rel, but some people don't. Okay, so this right here, right, in a heart apparently is a candlestick, right, and this is where buyers and sellers are. And each one of these candlesticks are associated, I'm drawing hearts, with a time frame, okay? Right here, right? So I want you to know that. That's pretty straightforward. Whatever time frame you're on is the candlestick that's being represented in that time frame, okay? So one candle is represented of the 15-minute that you see right there. Now, that's basic, elementary, totally understand, okay? But what I want to dive into is the basics of setting up your trading day and setting up your zone for trading. Okay, and then from there, then I'm going to teach you guys some of the things to watch out for so you don't fall into these traps and get chopped up. Okay, so so what we want to do oftentimes when you're setting up your week, you want to zoom all the way out. Okay, you want to zoom out to, let's say, the day, the week, the 4 hour, depends on what you're trading. Okay, and then from there you want to figure out where's your highs and lows, right? So we're looking for our supports and we're looking for our resistances, right? So pretty much like this. I'm angled right now. I'll get my stuff together. Like I said, I'm experimenting. So that would be support, and then this right here, this would be support, and the top line right here would be your resistance, right? So if I want, I can just go ahead and change that to red so you guys can see it and understand it a little bit different. Okay, so this essentially would represent your channel to which you are trading. Here's your high, right? And here's your low, right? That's simple. I'm trying to keep things basic because what you guys need to see is just get rid of all of the the details. There's so much intricacies that comes with trading, but when you're new, you really just need to understand at least the foundation of what you're looking at. So what we got here, how do you know what time frame to use? Okay, so see, this is what I'm talking about. Like, there's people out here that aren't really privy or knowing of what to do here. So thank you for asking. So the time frame to use is based on what your trading plan is, right? So for me, like, I always start with the weekly or the daily. As you can see up here, right? I always start with the weekly or the daily, and I do that because I get an overview of what that chart is doing. Not only can I establish my support and resistances, right? I also get to identify the direction of the market. So as of right now, for example, I can identify this as an uptrend, right? Where we have a higher high and higher low. So I know that we are in a bullish position, a bullish market, right? So when you zoom out, you get an overview understanding of what you are looking at, right? And then that gives you some type of clarity as far as how you're going to be setting up your trade. What are you going to be looking for? As far as the other time frames to use, you're going to zoom in eventually, right? So, but it starts with the overview. It starts with you it starts with you zooming out before you zoom in. You're identifying what's going on with the volume. You're identifying any situations as it relates to price action, right? You're looking for these candles, right? We're looking for engulfing candles. We're looking for all of these things, right? All of these things are signals that helps you understand where the market may be going, right? And when you have that overview understanding, when you zoom in, you can make those incremental moves, because the smaller price actions then syncs up with your wider scope view. Hopefully that makes sense. And trust me when I say it will make sense, okay? So hopefully you're tracking, right? So this is the SPY, and I'm using it as an example, and then we will pivot to some other examples here. But for now, we're going to use the SPY, right? So the first thing we want to do is set up our zones, right? We want to set up what range or zone that we're trading in, right? So I got my high, and I'm going to establish my low, right? And then from there, I'm going to identify any type of trend. So as of right now, I can see that we're trading kind of sideways, right? We had a bullish run up, and then we're kind of trading in this type of situation, right? So this is consolidation. So on a broader scope, we're pretty much saying that the market is trying to figure out the direction, right? We know a couple things looking at this chart. And again, this is kind of the technical jargon, but you have some like sell side liquidity going on here where they're looking to pick up sellers. So, or looking for sellers to step in so they can have somebody to like, so you can buy it, right? So one second. The market is all about it's buying and selling. So we need to find the buyers. We need to find the sellers when we're trying to have the price move in one direction or the other. Okay, so you're gonna see these long wicks, as you can see here. That's kind of tricking sellers that, hey, we're gonna sell off. Nope, we're gonna load the boat, right? And they pump the stock up. They trapped a whole bunch of sellers by running it back or pulling the stock down, okay? Only for it to push up to the top of the resistance. So when you see something like this, you see that we are in a consolidation, right? Now, technically, when you have a run up, right, into a consolidation, traditionally it's representative of a continuation. It's just kind of trading sideways. And what we're looking for is rather we are accumulating or distributing, right? So essentially we need a breakout or breakdown. Okay, we need one of these two things to happen, and then we're paying attention to the volume down here. Okay, so if volume, right, if volume is increasing as we run up, right, but when we come down, volume is kind of decreasing, right? That means that we have a stronger push towards the upside than the downside. That would be an early representation of what we call accumulation. So pretty much that means that we're accumulating a bunch of buyers here so we can send the stock flying. That's what that means. So we can almost be like a pressure cooker and then continue to the upside. But when you see something like this, you do need to wait for something called confirmation, right? So we're in this phase, accumulation or distribution. I'm going to say we're in an accumulating phase because we are have an increase in buying volume as we push up towards resistance. And now we're just looking for that final break, right? And on this break, we're going to be looking to see, are we going to be breaking on with an increased amount of volume? And then also, will we confirm? So will we pull back to retest this, the resistance to then later take off, right? We're looking for that type of scenario before we just hop into the play. Now, when you have a zone like this and it's so wide, you can try to time the tops, right? You can play the tops and bottoms. This is a reason to zoom out, right? This is a reason to zoom out. So hopefully that makes sense. Let me check the comments. How do you know what time frame? Okay, we got that. Ramesh, welcome. Good evening. Okay, so this is one example of consolidation and a potential continuation on the spot. So once you figure out your zones, right, then you zoom in, right? You say, man, I got my trading zones. What I'll do, just for clarity, I'll go ahead and put it here on the chart itself as well. That way it's very, very, very clean and clear. And I'll get rid of what I have here. Just use for an example, okay? So we have our support, right? A second here. Hopefully we're tracking, but we have our support, right? And then we have right here our resistance. Okay, pretty easy. So when we establish that, right? When we establish this as traders, right? We then zoom in. But before I move on and zoom in, I just want you guys to understand that simple concept of finding support and resistance. This is where it starts, right? This is where your map of what you want to do, right, and how your trading week is going to go. This is how you plan it. You figure out what your tops and your bottoms are. Now, it's not just taking the 1 point that's touching the highest or the 1 point that's touching the lowest. In my opinion, you need to have 3 points of contact to make it strong. So if you notice, right, we have 2 right here, right? And then we have 1 right here, right? And then down here we have 1, 2, and 3. Okay, let me get rid of my text here. Okay, but those give you like more strength, right, on the strength of those levels, right? Rather it's resistance or support. Okay, that's what you want to look for. Don't go for just 1 point. Look for 3 points if you can. All right, if it's there. All right, hopefully that makes sense. So if you have the 3 points of contact, then you say, great, I found my trading zone. In this zone, this is how I plan to trade. I know what my ceiling is, and I know where my floor is. So then you zoom in. Now you can zoom into the 4 hour, you can zoom into the 1 hour, whatever, you just zoom in. And what you're looking for as you zoom in is price action, right? Candlesticks, patterns, things like that. Anything that's going to give you some type of bias as to where this stock may go. What we're doing is trying to theorize what's happening in the market, right? Based on the data that we're receiving, right? So there's all types of indicators that's going to help you with volume. It's going to help you with identifying these candlesticks easier. There's cheat sheets. I have a cheat sheet that I share. There's multiple things that you can do. Okay, hopefully you guys can hear me. Put a 1 in the chat if you can hear me. Are Bollinger Bands helpful for this? Yes, sure. I mean, there's thousands of indicators and they all work. Let's say that. They all work. Depends on how you trade. Thank you, Queen. I appreciate you letting me know. Last time I was a weatherman and I talked forever and we had a silent movie and it wasn't fun. Sorry if my delivery is a little choppy. It was a long day, but hopefully the message is coming across, clear. I will clean this up. All right. But so we're zoomed in, right? And this is now the 4 hour, right? Oh, that's the day. But you know what I'm saying. So we have our 4 hour time frame. I went from the day to the 4 hour, and I'm gonna just work my way down, right? I'm gonna work my way down from here to here to here to here. And then when I'm intraday trading, then I'm looking at these, right? So that's kind of how I'm doing it. You break down your chart in stages or levels. Now from here, now I'm looking to see, okay, well, like where are we finding potential demand? Where are we finding potential supply? Are we seeing any type of price action, any chart patterns that's readable, blah blah blah, right? And I'm going to get into some of those nuances as we zoom in, because what we're trying to do is sync data, right? I talk about zone syncing, right? Where you start from a zoom out perspective and then we get incremental. And what you're doing is looking for price action on a lower time frame that's going to sync up with the data that you found on the larger time frame. That's what we're trying to accomplish here, okay? So when I look at this, right, you can easily tell what's kind of going. I mean, it's not necessarily easy, but you can see that the market, every time we get to our support, right, we have what's called sell side liquidity, right? We're pretty much faking out sellers, right? We're getting sellers to load up, right? Or like sellers to kind of like step in, rather retail sellers or whatever, right? And are doing this only to be ready to launch, go on a launch pad with buys, right? Launch pad with buys, right? It's kind of what is going on. And you get that typically from both sides. Up here, you would typically see buy side liquidity. And then down here, I already told you, this is sell side liquidity. And essentially what that means is that we need liquidity in the market for the market to move, right? So you can't buy something if you don't have sellers, right? You can't sell something if you don't have buyers. And this is kind of what they do to kind of trap people. And then you get the FOMO and all the other stuff that kind of pumps it in another direction, right? And then like the floodgates open. So that's what they're doing. They're grabbing buyers or sellers so they can move the stock in a direction. When we understand things like this, we psychologically, we can understand kind of what's going on and what we're looking for. Okay, so that's that. And so when I'm looking at this, these are strong support levels, right? And when you pay attention to the volume is pumping up. These hearts are killing me right now. But volume is pumping up, right? Bullish volume, right? Pumping up. That's good. As price is going up, hold on, I messed up. But as price is going up, you're seeing more bullish volume, right? Pretty much what this means is that there's buyers and sellers in this candle, just so you know, in this volume candle. It's just saying that the buyers are more aggressive than the sellers. That's what this means, right? That's what that means. Okay. Okay. Put a 1 in the chat if it all makes sense, right? So far. Okay. And we're going to get into, like, we're going to delve deeper. And I know we're limited on time, but we're going to delve deeper so we can figure out how to use this on a day-to-day, right? So from down here, one thing I'm looking for is potential areas of demand and potential areas of supply. So if we want to pay attention to, let's say, let's pay attention to where we are right now. So we're trading more towards the upside. So what we want to do is look for areas of potential supply. And as of right now, I mean, it's not clear cut, right? I mean, you kind of know where the sellers are, but this right here, let's see if I can get my pen to work the proper way. Okay. I gotta lock my screen. I think this works. There we go. I think I got it. All right. So there's a candlestick here, there's a candlestick here that would represent a price action and would give us our supply zone. Okay, so this whole zone would be our supply. Pretty much anytime we touch this level or get within this box, right, this is where the sellers live. Sellers like, hey, this is our house, buyers not allowed. Okay, you come knocking on our door, we ain't answering. You get into our house, we kicking you out. That's kind of what this is right here. Okay, that's what a supply zone is. It's where all the sellers are living. They're saying the buyers can't go past this level. You're not going past go. You're going right to jail. Just kidding. But that's what this is, right? So in order for us to be bullish on this, we need bullish momentum, right? We need bullish momentum. That means that we need an increase in volume down here. And then we need a breakthrough, and this needs to become new support, right? The top of that zone. Okay, that's what that is. Tracking so far, to be honest, it's great. I appreciate that. I appreciate that. Hopefully it's making a lot of sense. So when we're looking at where we are at this very moment, right, I don't think I want to focus so much down here right now, right? I know this is a ways away. We're eventually going to pull back to 654, maybe if our buyers lose steam. So let's focus on closer to where we are. And as of right now, I can say that I do see a level of demand. Remember, we are still on the 4-hour time frame. We're very zoomed out. So right here, you have a doji candle. I think I did. That's kind of decent. I got to get better at my stylus. Again, this is all new experimental stuff. So essentially, I kind of got it. All right, so essentially this would be your demand zone. Typically my demands are blue on my chart, but demand, right? So this green box is pretty much saying, okay, well, this is where buyers kind of load up potentially, right? And that's indicated things like this. Well, let me go yellow so it can look a little bit better. Okay, so when you're seeing these type of wicks within this range, right, you're seeing wicks, right? You're seeing buying volume. You're seeing like a reaction here, right? These are indications that this is a potential area where buyers are trying to hold the line, right? So we push from down here, right, for buyers. Well, we're trying to find our next floor, and we're trying to find our next floor, and we're trying to find our next floor. We're trying to pretty much press and find new levels of support, so there's less movement to go to the next level. Okay, that's kind of what we're doing as buyers, right, on demand. So with this, you also have, hold on, give me my color. I don't know why it won't give me my color, but oh, there it is. Okay, so with this, you have an imbalance as well. Okay, so purple on my charts represent an imbalance, and we're gonna zoom in so we know what that is as well. I mean, I see that's off my screen, but purple is imbalance. Okay, that's what that is. Okay, so the imbalance, this will be real quick. It's not supposed to be that type of class, but the imbalance, let me close this in, is the distance from the bottom wick of this candle to the top wick of the previous candle. Hopefully you can see that. Okay, hopefully you can see that. If you can't see that, let me know and I'll zoom in. Okay, so once we can identify where our supply and demand are on a higher time frame, this is how your boy gets 400% runs. Okay, like we just did on PayPal. So we have our 1 hour or 4 hour supply, and then we're gonna have this represent right here a 4 hour demand. Now I'm not a big fan of this demand zone, but we're gonna use it. We're gonna run with it. Okay. So from here, another thing I'm noticing is that we're now experiencing lower highs, right? Not by much, but just enough, right? Just enough for you to be able to spot it. Okay. I don't know why I can't just get yellow. There it is. Okay. So when you see a higher high, right? I got to thicken up this so you guys can see it better. There we go. All right. So here you have your point, right? This thing loves hearts. There we go. You have your point. But notice that right here is a lower high. All right. And even right here next to it is another lower high, technically. So you pretty much have this going on right now. Okay. So when you have a move like that, followed by a key level of support, this gives you a price action or a chart pattern. Okay. And this chart pattern is representative of a neutral position. So this is neutral. Oh, I don't think I know how to spell neutral. Neutral. All right, I think I got it. So this is a neutral chart pattern. When you see something that's neutral, that means that a decision has not yet been made as far as the direction. So you typically get something like this. And then we also look for 3 points of contact before, and then we look for the breakout. Okay. So this chart pattern that's potentially forming, it's not 100% formed. This is just what I'm theorizing based on what I see right now. There's a potential for it because I see a high, a lower high, and a lower high, right? While the floor is pretty much even. So this gives you something called a descending, this thing is called a descending triangle. Okay? That's what this is called. These are dangerous, okay? These are dangerous. How much time do I have? Okay. So from an education standpoint, let me clear this up. When you're trading, especially if the market opens, I want you to be cautious of these neutral positions. You have the symmetrical triangle, right? You have the descending triangle, right? And then you have the ascending triangle. Okay? These are all ones to watch out for. Okay? These, okay, hold on, let me write this. Symmetrical. Okay? Descending. And then this is ascending. Okay? These are all neutral chart patterns. Okay? These, you need to be cautious. Okay? Caution. For real. If you can spot this, then you're doing yourself two favors. You're doing yourself two favors if you can spot these. One, you are prepared for a breakout. But two, you are also patient because you know that a direction has not yet been made, right? So too often, and I get trapped in this sometimes, right? Too often you see this and you see, oh, it's going up, I'm gonna hop in, right? And you say, oh, we're running, and boom, like, oh man, what happened, right? And then same thing, you think you're about to go up, and then boom, it comes out against you, and then you're just getting chopped up. This is specifically bad if you are one of those individuals that are setting poor stop losses or arbitrary stop losses. Okay, and what do I mean by arbitrary stop loss? That means that you get into a position and you say, okay, I'm not losing more than 10% on this position, so I'm just gonna set my stop loss for 10% less than whatever my entry was. Right? So you got to be careful with those, because if you do that in one of these and you're setting arbitrary stop losses, right, then you're kind of screwing yourself, right? You're screwing yourself because you're getting worked by the market, right? And all the while, you could be right as far as the direction, but you didn't wait for this play to play out, right? For you to be on that train. Instead, you blew your account before it could break in the direction of, of what you predicted. Smash the like button. Thank you, babe. Wife's in the building. All right. So, does that make sense? All right. We're limited on time, but hopefully that makes sense. Now, with that all being said, okay, that's the spot. We can dive in, and I can go from here. Typically, from my 4 hour, I would go to my 1 hour, and then from my 1 hour, I go to my 65 minute. I'm sorry, I would reverse those, but then I would eventually get to my 15 minute, and then so on and so forth. And as I'm zooming in, I am looking to see what's happening around the levels, the zones that I traded. So as we get closer, we're looking at how the zones are sinking. We're paying attention to, do we see a pattern? Now, I'm going to ask you, do you see a pattern right now? Because I do. So we hit our level, right? We got kicked out of the door. The supplier said, buyers not allowed. We're the He-Man buyer hating club, all right? No go, not allowed, right? And then, so we got kicked out of there, and then we found a lower high, okay? So you actually have another system that is forming, right? You have a system that's forming because you also have a lower low, okay? What does that look like, right? What does that look like? Well, this is called a descending wedge, okay? So what I'm saying to you is that it's important to try to identify some of this. Now, as a new trader, well, let me see if I can just write this better. Descending, I already spelled it wrong. No, I think I got it. I'm hitting my delete button. Okay. Okay, descending wedge. And just so you guys can see it, that's that right there. Okay. So with the descending wedge, you're coming in from an uptrend, right? And then we're falling into this wedge system, right? So a descending wedge is actually like a special pattern, okay? And by definition, I mean, read it verbatim, a special trading pattern appears on both market trends and has a predetermined outcome of a direction. So The market makers, essentially, those that are controlling the momentum of this stock right now, they already know where they're going to take this. And because we had such a rally, right, there is a chance that this is just a looks more like a bull flag. It is a descending wedge, but this could be a bearish, or I'm sorry, a bullish setup. Okay, so just be aware of what's potentially there. Okay, will it happen? I don't know. All I know is that when you have this formation, we're looking for a breakout to the upside or the downside. Now, a lot of these positions, a lot of these formations or patterns, to play them on breakouts, you're typically looking for the highs and lows of the patterns as your potential take profit targets. Okay, so that means that as this came in here, if it breaks out, then your take profit target would be here. Okay, and then what typically happens is that from there it might shoot all the way down, right? Because this could be like a false move or a false breakout. And why could we predict this be a false breakout? Well, because this is where our sellers are. Sellers are present, right? Why do we know that? Because we've already identified this as the supply zone. Okay, right? We did that on the daily time frame. Okay, hopefully it all makes sense. So as you can see, we had a zoomed out view. We identified our highs and lows. We identified our supply and demands, where our buyers and sellers houses are, right? Then we identified a pattern on the higher time frame, which, what did we identify? A neutral pattern, right? We identified that overall, in the grand scheme of things, we're still trying to figure out our direction, right? And then we zoomed in even further. So now we're here on the 15-minute, right? And now we've identified, like in this current movement, a descending wedge, right? Right? Which we know that there's a predetermined position. Now, if this, we don't know how this is going to play out, but you can see that in this area, what did we talk about? We talked about liquidity. And I'm trying, I wanted to make sure that I didn't get too technical. And so I'm not going to dive any deeper, but essentially you're seeing these false sells, right? We're trying to get sellers to jump on board so we can have somebody to, so we can buy it. We need to find the sellers so we can buy it up and run it up. That's kind of what's going on here. But it's a matter of who's winning this battle, right? Who's going to win it? The buyers or the sellers? Okay. Up here, we have another price action situation where this is now a supply zone as well. Why? Because we have a bearish engulfing price action. I love the hearts, apparently. Okay. So these are things that you pay attention to as you're zooming in, right? Bearish engulfing is where your red bar is engulfing the body of your green bar. This is a sign of a sell-off, which we did. We had a nice little pullback. Okay. Then we had this liquidity thing, but it was not met with bullish volume here. Okay. So these are things we're paying attention to. Okay. All right. So what does this tell you? Tomorrow, right? If we were to use this area, I think I can do that better. If we can use this area as an intraday, it's an intraday supply zone. This is going to be our signal on rather or not, like we are going to be bullish, right? So as we come here, if we come back, we might retest this level, right? But do we retest and get rejected, or do we retest and push through it, find support, and then continue upward to then go find what? Our 4-hour supply zone. Okay? So pay attention to those things, okay? Hopefully that makes sense. I was going to say descending chain. Thanks, Dale. Yeah, you're on the money, big dog. I love it. All right, so that's pretty much like the gist of it, right? Like you have to wait for breakouts. You have to identify your support and resistance. And then what we're doing is trying to see if we can sync these patterns in candlesticks around our zones. So what do I mean? So, for example, we know this is our 4-hour demand zone, right? We learned about imbalances. I'm gonna use white here, but we learned about imbalances. So we were able to establish an imbalance right here, like as we were exiting the demand zone, okay? This is added support, right? This is giving us a stronger signal that we have some room to the upside, right? So this is what I mean. Like, so I'm on the 15-minute, and then these individual 15-minute candles, right, are telling me a story that's syncing up with my 4-hour candle or my 4-hour analysis, right? So in the 15 minutes, I see that we had a bullish move up. We have pretty much demand within demand, right? And then we established imbalance, and then we closed and opened above our demand zone. On top of that, we have bullish volume increasing as well. So this is the stuff that you're looking for to confirm your bias in one direction or the other, okay, everybody? This is what we're looking for, right? These are things that and tools that if you can master, and if you can spend the time and spot them, right, it will save you headache. The biggest issue, and it's one of my issues, is having the patience to wait for these things to happen. Notice how choppy this is, right? This is what we call a passive zone. Okay, now we're not gonna get into all that right now. We already talked about this in other training sessions, but I want y'all to know this. We have people here from Sacrifice for Riches. We have people here from the KGU that's OGs and whatever. Just know this. The game I'm giving you right now is doctorate and megalodon level stuff, right? So I started off with the really basic elementary information, but as we're graduating through our duration here, we're talking more and more advanced a little bit here, okay? So I'm saying that because it's probably in your best interest, like just to upgrade. Not just for me. I'm not the only person that's live trading, okay, or live training. There's plenty of people to learn from. I just identified another system, okay? So I'm gonna tell you what the system is, and then we're gonna kind of go in closing, and then I think go from there, right? So this system right here, can somebody tell me in the chat what this system is called? Anybody in the chat, tell me what this system is called. All right. So what this is, if you don't know, now you know. This is a megaphone. Pattern. Okay. That's what this is. So the two lines where you have, it's kind of showing you that higher highs, and then it's showing you the lower lows. So it's kind of going like this. Megaphone patterns are known as continuations. Okay? These are things that if we're identifying, we may be able to do a better job, right? Of let's see. Yeah, if I were to lock in a little bit tighter there, um, you'd have a better pattern here. But this is just for examples. So, all right, that's good enough. All right, then you got your breakout. Hopefully that makes sense. But yeah, that's your megaphone pattern. It takes off. Continuation. I mean, you can see that, but that's also inside of a demand zone. So you can also argue that this is just trading sideways, which is fine. Okay, which is fine. But one thing that we know is that as we're looking at these zones, as we come down, right, we're looking at volume, right, as it comes down. As we go up, we're looking at volume as it goes up. So this tells you that this whole area is likely in what's called an accumulation. Again, this is more technical jargon, and if it's okay. Yeah, it's okay. There's a lot to it. So hopefully this all makes sense. Good job, Roll Life, with the megaphone. Let's go. That's what I'm talking about. So today we went over, I'm not going to write it all out, but the takeaways though, I want you guys to be cautious. Cautious of neutral chart patterns. I can just say neutral patterns. Okay? I want you to be cautious of volume nearing our zones. Okay? Right? So, example, if you have a supply zone, for example, and as price is going up and approaching that zone, you see volume. Hold on. You see volume going down, right? This is representing volume. Then that means that on the way up, buyers are losing steam, and we're waiting for this nice volume candle because sellers are stepping in, trying to push this down. This will be that indication, right? Yeah, it's the other way. But yeah, I think y'all get the gist, right? That's kind of what you want to look for. So be careful of volume as we're approaching levels. And then also as we're approaching levels here, so like this is the supply zone, you need to pay attention to price action. So if we're coming up here, right, with nice candle, but as we approach, we get a doji. Let's see if I can draw a doji here. That's clean. I can't get a clean doji. All right, so then we're expecting something like an evening star. Horrible box. Okay? Evening star. So then I have a price action. So that's what I'm saying is that we need to pay attention to price action around our zones. We need to pay attention to chart patterns around our zones because these will be indications of what's going to happen with the stock, right? Because this could be a continuation of a sell-off, or it might open below the candle, right? And if it does that, then we're looking for confirmations like imbalances, right? Remember imbalances. Imbalances is the distance between the one candle and the next candles. So the bottom wick of a candle and the top wick of the next candle, right? Or vice versa, right? So this right here, from here to here, would be considered an imbalance. Okay. Hey, Rel, what is an imbalance? I got to wrap this up. But essentially, there's a bunch of sellers, right? Bunch of sellers here that had the bid button hit, right? But everybody decided, okay, we're going down. So they just hit the ask, right? And they're just hitting the ask and just bypassing the buyers. And what happens is eventually we come back to pretty much come pick up the bidders, right? So it's like a fill imbalance, right? Fill side imbalance. So we're coming back to see if we can pick them up. But the question is that do we continue through, or do we come say what's up and here's your opportunity to grab the ass like everybody else and then continue down, right? So an imbalance could be used as a potential confirmation for support, resistance, or whatever for a particular move. So Rel with the magic tablet, caution equals patience. Lord knows I need more of that. Let's go. Let's get it. All right. But yeah, that's the cautionary tales. Okay. We're looking for syncing of data. We're looking for cautious neutral positions as markets is trying to find directions like symmetrical triangles, right? We just got to be patient for those breakouts. And then we have to be cautious of the false breakouts, right? Typically, the tops and bottoms of a neutral position are traditionally your take profit targets. And traditionally, sometimes the initial move isn't the move. It's just the pump fake for the actual move. So just be careful. All right. I need to know if using the tablet made sense. If it was helpful or if it was more distracting. I need to know. I need feedback so I know how to move in the future. Because I'm just trying to do things a little different. Pretty much, I didn't just buy a tablet or something like that for this. I have technology around me. It's just a matter of using it and using it purposefully. So I want to make sure that if I'm introducing something, it's well received and it's not a hindrance on the education piece to you guys, because that's what it's all about. It's giving y'all the knowledge. Okay, thank you. Very helpful, visual learner. So I want y'all to do this. We only had about 22 people, maybe a little bit more that came in today. I want y'all to go into your respective Discords and speak to the training, right? Just speak to the value of it. Rather or not you think people should tune in, whatever. The reason is because, some people might think that, training could be a waste of time, but I think it's just important for people to know that we're not here to waste time. Our time is valuable. I make more money trading than, in this time period, right? Today, what do we do? This morning before market open, let me see if I can do this. Yeah, this morning before market open, we hit, right? I hit on some call options. I think it was call options on NQ, right? Yeah, it was call options. And it took me 5 minutes to do this, right? And now I'm not funded or anything like that. I'm still struggling in my futures journey, but it's everything I just talked to y'all about today. And your boy is 100. Like I'm never gonna pretend I can't. That's just not who I am. But I know what to do, right? I just showed you like that, and the levels were sinking. It was set up for me. Like things make sense. It's when trading becomes hard when you shouldn't be trading, right? That's kind of what a rule of thumb should be. If it's hard for you to see a play or take a position, then it's best to walk away, right? Because likely it's not a setup for you, right? So I personally, I was doing great at the beginning, first half of the year, and then I went through some rigmarole with some personal stuff, and I kind of went into the slump, right? And my brain is kind of getting back to the refocus. We're dialing it in. We had a 450% PayPal. We had 100% on Nvidia. We had a 50% on SPY. We hit on Intel. We hit on Bull. We're hitting on PTRN. Like, so we're killing the game. But there were some times before that, especially like day trading, your boy was getting smoked because I'm a little greedy. I'm used to my bigger wins, and it's hard for me to accept the 10-20% gains, especially when you're playing with a small position like I typically do. And that's on me. If I was playing with thousands of dollars in a position, then it might be a little different. If I had let's say $1,000 in a position and went up 10%, okay, I'm happy with my $100, right? So but I'm not typically doing that, and I think for that reason I get smoked sometimes in the day trading aspect of things, not because I don't know what I'm doing, not because of my technicals. It's just because of discipline and not accepting. And I talk a lot about acceptance. So that is it's a forever journey. It's something that you always got to check yourself. So my closing remarks to you is to please be patient and try your best to identify the patterns, especially the neutral positions. Okay, the neutral positions, in my opinion, are the ones that smoke people the most, and you don't know that you're in a neutral position until after the fact. So try to get familiar with those triangles that I showed you, and then zoom out, right? Set up your chart to figure out where your support and your resistance is. And then once you have that, you know where your ceiling and you know where your floor is. So when you get to your ceiling or when you get to your floor, you can likely move without hesitation and hop into a play. That's how we hit SPY on a 300% gain, right? It was insane. Like, that's because we called the bottom, like, right? We seen the sell side of liquidity before the pump. So like, we just get instinctual, but also get yourself prepared, right? So hopefully it makes sense. Real, do you go live every day? No, I do not. Awesome training to build the foundation on the chart, identifying the zone. Yes. Thank you, Ramesh. Thank you. Very helpful. Love to hear it. All right. Tell a buddy. My goal is to get 4K subscribers this month. I didn't hit it. So if you're not subscribed, please do. And if you got a community, then please share my channel, because I'm trying to grow, but I'm not a 5 video guy. That's just not who I am. So my growth is slow, but it's by design, because I don't want to live on YouTube. So, but it is what it is. But anyway, that's all I got, y'all. Any questions? I'll leave it for 2 minutes with any questions, and then I got to get off because we're already 15 minutes past my time. And it's late. All right, going once, going twice. All right, everybody, this is Stocks for Real, Sacrifice for Riches. I will see y'all in the Discord. I will see y'all on the live trading sessions. Hopefully I will be live trading tomorrow. I will let you know. If I see something I like, I'll tune in. If I don't, I probably won't. It is what it is. Y'all have a great night. Take care.